Well, welcome back, everyone. It's been an exciting week, and we're just beginning yesterday's market with the big rip up into the end of the day, and of course today's market with the idea of trying to get back into a zone where we can build a base and potentially move higher on the backs of a market that is getting some big data this week. We're getting the private payrolls data tomorrow morning at 8:15 Eastern Time. We are also going to get Apple and Amazon after the bell on Thursday. And if we look at the slip that happened last week, Thursday, and then the reversal on Friday, against a set of levels, pivot lines, and channel lines, well, the market that we had yesterday did not break out above the top of the range of that big red candle, nor did we come down below the halfway marker. In today's market, we ended up red versus green, which is something we talked to Active Trader Room members about on Friday, and said, hey, the market may be able to hold up into Monday, but we're expecting a dollar bounce into midweek, and that's going to take a little edge off the market likely and push precious metals down at a bit of a faster rate. So some great trade ideas that we had called out last Friday, and of course again yesterday on bearish intraday type trades, overnight type trades on precious metal miners. And one of the vehicles that we looked at was DUST, which did very well today. Now, the question is, the primary equity market, the way it presents is in the upper half of that big range. We know that the market is still trended up. So what I'm going to do now is I'm going to take you to a template for those of you that had joined us for the Wealth 365 Summit, the Wealth Charts Accelerator classes that I held after that, and all the great teaching that Rob did. Well, during that summit, putting the pieces together for a higher probability trade is what he was expounding on. I added where I could there, and of course, continued the teaching in the Wealth Charts Accelerator. And the reason I'm saying this is we're going to be building upon that again tomorrow for members that are annual members of Wealth Charts and the Active Trader Room at becomebetrader.com. We're going to be doing a 3-day intensive. This is done every quarter for annual members. Now, back to the matter at hand. If we are looking at the screen right now with a daily chart of the SPY, okay, it's obviously got our technical tools on it, and I've got it in dark mode a little easier on the eyes. We are sitting with a champion cross buy zone with the blue dot engaged. The size of the zone is stable and or slightly expanding, bullish. We've got a champion trend buy zone that's been in place for a while, obviously. You can go back and see that all the way back over there. Now, the champion trend buy signal and, of course, zone overall is bound by that green line at the bottom. So there's very inherent visual risk cues here. If something goes wrong, there is a safety net at the bottom of the champion cross buy zone and or champion trend buy zone. So that takes us down to about $445. Now, I'm not saying that that's the likelier outcome. What I'm saying is that the rise has slowed down and we've got a negative momentum shift after we broke a negative divergence. So it puts the market in a bit of, falling resistance, if you will, and rising support, with the bigger time frame signals still being quite bullish. Daily and weekly, still bullish. We have got a door that needs to open, which is highs from last week, that would break that negative momentum shift. But the toolkit that you're looking at on screen right now can, with a multi-time frame view, improve on that. Looking at a daily chart can look out a week, 2, sometimes more. Looking at a 4-hour chart can look out potentially 3 to 5 days, sometimes more. And what's the 4-hour chart got? It also broke a negative divergence last week. It also has a negative momentum shift. It also is in a champion trend and champion cross buy zone. And we are sitting with a value that's a little less than the highs from last week. I was thinking around $458 and about 15 pennies or so as a resistance area where a negative momentum shift presented that would have to be broken above to open the door for more. Now, the inherent state is bullish, but one of the things that you can see with the champion cross zone on the 4-hour chart relative to the daily is it's compressing, it's shrinking. And that means that the bullishness is not intensifying, it's de-intensifying, and we're moving into what may be a consolidation pattern before another bigger attempt up, or a topping zone. Now, the hourly chart that you have at the right-hand side of the screen is giving us a view of a market that got torn down last Thursday, built back up on Friday, and opened up the week this week up in the areas that we were expecting, and then started to sell down. But today's market, as you can see, going back to the first bar for the first day of this month, you can see that we were in a volatile first bar. Stability came in, but we did not move up enough and get signals that were confirmed. We were in a champion trend buy zone, but the signal from the champion cross was not intact. We've got a shrinking, obviously, champion cross zone, and no blue dot, no bullish signal. So there was indecision. During that indecision, we got some IRB tracker indications that suggested that the move is not going to unravel. And then it was followed up by a bar right over there, the 12:30 p.m. Eastern Time bar, that has a positive momentum shift, followed by an IRB buy strategy. And over the last couple of hour bars during cash hours, you started to see the blue dot remain after it presented on the hourly bars at the close of the bars, and we have reignited a champion cross and champion trend buy. Now, we're in a buy signal state on a 1 hour, 4 hour, and daily chart. If the market is to be called down, we would need to see a signal state change. Now, into the evening and ahead of 8:15 a.m. Eastern Time, there's potential for that based on geopolitical news and more, but the signal state that the market left in was more positive than not, but it's a weakening positive. So my insight culminates down to there is still downside risk remaining. If the jobs data comes out and is incredibly strong tomorrow from the private payroll ADP company, well then, there is a fairly good chance of a down move in the market. That down move on a daily chart could take us down to that middle of the 440s. On a 4-hour chart, down to the 450 area. And on a 1-hour chart, down to the 453 area. So there's 3 risk levels that are visually impactful right there with a powerful toolkit to help those managing into the midpoint of the week. And of course, over to Amazon and Apple after hours on Thursday, and then the official jobs data on Friday. It is a power-packed week of data. It will remark the end of Q2 earnings season. And then we're in a month where seasonality is not as kind. Liquidity may start to run dry if Yellen starts to offer longer-term paper into the market tomorrow rather than shorter-term paper, bonds, if you will. And the idea would be watch carefully the direction of the dollar and the direction of the S&P. S&P's above 458, 459. The dollar's probably headed down. S&P's below the lows of today. We've got some risk inherently baked in there for about a $2 move down to the champion trend support zone, and then evaluation would have to take place. So the nature of the analysis that I just did right now, and much, much more, is what we're going to be doing for members of the Active Trader Room and Wealth Charters that are on annual subscriptions. We do this every quarter, and we're looking forward to doing this with you. We've got an incredible lineup of speakers tomorrow. I'm speaking, John Person's speaking, Hubert Centers is speaking. The day after, we've got Jake Bernstein, one of our own, to get into the nitty-gritty on Wealth Charts. CJ is going to be speaking, and many more, and Lori Jones as well, and of course, Dr. Keith. It's going to be an incredible 3 days. I'm pumped about it. I'm looking very much forward to seeing many of you that may be watching right now at that class. And of course, I'm looking forward to trading out the balance of the week. Have an incredible rest of your day. Thanks for watching. A big shout out from Rob, working tremendously hard on incredible projects that, well, hey, he always says we're just getting started. And he's true to his word because I see the behind the scenes. Have a great rest of your day, folks, and thank you for watching. Bye for now.